Well, hello, Maverick traders. It's market roundup time. Joe with you here. It's the 1st of October. Can you believe we're already in October? Well, it's here. Pretty interesting day as well. I've got my 2 cents. Take responsibility for the outcome. You guys know this drill. Let's take a look at what happened in the news today. Actually, a lot did. And we'll take a look at the technical analysis. And let's go out and share trades with the community as always.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
As we move into the market analysis, you guys can see that we actually had a down day. Let's take a look real quick how we finished. Dow down 0.41, S&P down just shy of 1%, and the Qs being one of the weakest as we've seen as of late, down another 1.5%. Russell's down 3%. Oil had a jump at 3.23%, a good push off the bottom there. However, folks, this is still around that $70.50 a barrel, and then gold popped up as well. Now, looking at this, you would think, oh, it's just a little bit of a consolidation or a pullback, consolidation in the Dow and a pullback in the S&P and the Qs. However, let's move over to the daily news. It was a little bit more than that, as we had Iran launch a missile strike on Israel that did cause a little bit of some concerns across the world, let alone the U.S. But the U.S. markets moved lower, but not outside of norm. I found that to be super interesting. We did see a pop up in the VIX. It did get above the 20 level, but I believe it settled below that, about 19. So the concerns were, oh, geez, is this something that's going to create a catalyst to where it's going to change sentiment? And so far, it hasn't. Now, it might be a day or so before it really sinks in or things happen, but it was interesting to see that the U.S. markets, if I was to take that news out, did exactly kind of what I would expect them to do technically. Volatile move in oil today, and that's to be expected. But however, it's still within its bearish trend, and I actually pulled that chart for us to look at. So first off, folks, advanced decline line, let's get there. The advanced decline line, we are 68 declining, 28% advancing, 68% still above the 50-day moving average, 32% below. So it's not like there was a massive catastrophic change, and maybe this will come later, 2 or 3 or 4 or 5 days subsequently. But overall, the markets seem to be doing exactly what we would expect them to do technically. We'll get to the heat map as well here in a second. But let's take a look at the overall chart. And what I was looking for was something to show some sort of a reaction. And take a look at that volume. I didn't get it on the S&P. You take a look at the candle that or coincides, I should say, with us, and we're still up at some levels that are pretty much sustainable. Regardless of the news, folks, let me draw my line. We're still at this area of, okay, look, sloping 50, sloping 20. It looks just like a pullback. We said consolidation or a pullback would be expected. Yeah, the candle's a little bit large, but understand that we actually did just gap down a little bit lower and then fall off. So we'll see if this continues. The idea is, hey, it's got to just kind of find an area between the 20 and, let me draw another line here, some support levels. So it's got a pretty wide landing zone, regardless of what pushes it there. Now, right now, sentiment could be changing. I know that people's outlooks on the world and so on and so forth and where these markets could go, I agree. But technically, it doesn't seem like we have too big of a reaction right now. So I just kind of have to keep charting what I've got in front of me. Let's take a look at the Qs, and you can see it's a little bit more. I did see more, I don't know if you want to call it a reaction, but hey, it's a little bit of an increase in volume there. But overall, it's the expected candle that we were looking for. We've got a level here. I'll draw a little higher there. We knew that it was going to pull back, especially after a gap to the upside. A crossover, a sloping 20, this 50's flatlining. We do have the ascending triangle pattern, and we know that the Qs are the most volatile. So I would expect something like this. I would expect an absolute retest, probably around that 476 area, or at least this rising 20-day moving average before a turn. Now, sure, This is a large candlestick. It's got a little bit of a pop-up in volume, and it's only been a day. This could change, but I'm just going to... I have to keep my outlook because technically it hasn't really flipped my charting at all. So let's take a look at what reacted to this situation, and it's an absolute reaction to the technical side, right? We've got the technology side. I'm just going to go ahead and try to box this. We didn't see anything too big outside of that. It seems like anybody that's jumping out of the markets based on whatever you want to call it, obviously we had some bad news and things, but boy, it came right out of a very specific area, didn't it? Because if you take a look at everything else, even the communication services that I've been talking about a little bit over Senate didn't do too bad. They hung in there. Healthcare, which has been super weak, one of my weaker sectors out there, did okay. Energy, of course, is going to have the reaction. But there's not really much to gauge just on one day. It was very interesting to see how little the markets reacted. So let's take a look at the oil futures. I thought this would be fun for you guys to take a look at. This is oil. This is the reaction that we had, and it's a huge one. 72 down to, what's that, 66 and a half. We finally settled about 70 and a half. I mean, this is definitely still moving. It's a futures contract, but I mean, as I took the snapshot, so we're still below $71 a barrel. It's still well within its descending problem. It's been very volatile as late, right? Push, pull, breakdowns, and that's because we're seeing a global slowdown in some of the economies. But obviously, the candle today was based on something a little bit more urgent than that, but where it settled was still well within the parameters of a descending triangle. So I don't see anything that's going to really spark the energy costs or really push anything higher. As of now, it's simply a reaction to just a horrible event. But it was very interesting to see that the U.S. markets really didn't react to it, and so I don't want us to as well. We got to follow the charts. So here's my weekly outlook. It didn't change, folks. I don't know what else to say. I know you think I'd say something based on the events or what's going on, but it didn't change. And the reason being is because it's technical. It's a pullback. We had a big green candle yesterday. We got a little red one or a big red one today, but it's still within its parameters. We still have this ascending triangle. The moving averages are still the same. I have to keep it a +1, +2 outlook when it comes to weekly and monthly. Now, what's really interesting about that is some of the trades that we've been looking at over a little while are still doing the same thing. We still see some strength in the strong. We still see some weakness in the weak. Let's take a look at what I've got for today. We got Walmart. It continues to move higher. I just like the ascending triangle pattern here, regardless of what our political outlooks are, what we see in the news. We got to price action things, and it looks like this really wants to move higher. So this is something I'm looking at for an ascending triangle breakout, maybe a diagonal spread or some sort of a targeted butterfly might be nice on that. And then on the bear side, I'll just go straight to it. I mean, you got sideways stuff, but once again, check it out. It's Moderna. It's something that's been weak for a very, very long time, and it hasn't changed. So it's really neat if we can kind of quiet our political outlooks, our bias, what we believe could happen or should happen, what should be strong and should be weak, and we just stayed with it because I'm seeing a whole lot of confirmation in sectors and stocks that have been weak and sectors and stocks that have been strong. They really haven't changed. Yeah, there's been some pullbacks. I mean, even with Moderna, there's a pullback here, a little bit of a pullback there. But the overall trend itself is staying put. So I just want to kind of reiterate and re-show these trades because, hey, it can be volatile when it comes to news, but the overall price action is what we got to follow. So the markets remain within their respective trends. Keep in mind, it is early yet. Give it a day or so. Maybe we'll break out. Maybe we'll break down. I don't know. But right now, there's nothing to really change our outlook on. Sentiment remains unchanged for now, regardless of the outside concerns. They might bleed in. They might not. It just depends on where price wants to go. Sentiment drives the markets. Manufacturing and job openings were in line, showing that we're kind of in line with that flat landing, or I should say that soft landing that the Fed's looking for. We do have the ADP tomorrow, and we got a whole bunch of Fed people talking, and then we do have more economic reports coming out tomorrow. I'm going to do this again with you guys tomorrow, so I'll make sure I post those. Check earnings on trades. As always, they can always kind of jump out there, but I believe there's enough going on to where we've got enough to worry about. Follow sentiment, follow price action, please. We've got our political views, we've got our world views. So we got to follow sentiment because that is all that matters moving forward. And it will keep us consistent in our trading. All right, folks. Thank you so much for joining me. We'll talk to you tomorrow. Bye, everybody.